All right, let's now bring in a familiar face and voice to many of you. But you may not know this about Tim Seymour. Obviously, a trader, CNBC contributor, an all-around great guy. But he's also a small business owner. In fact, he owns the bar WXOU, which I would argue is the preeminent dive bar, and I mean that in a loving sense, in New York. Tim, how big of a blow is this to your workers, and are you still going to pay them?
Hey, Brian. Happy St. Patty's Day to you. Look, this is, we're going to be closed. We're going to be closed for the foreseeable. We can't do takeout of green beer today, and so we've got staff that we will keep on. Look, we have it better than most because we have a pretty lean business down there. We're a bar. We don't have a big restaurant staff. But what I think people underestimate is the pain that the small business owner was going through before this happened. Commercial real estate prices are exorbitant in Manhattan. They've gotten worse, especially with lower interest rates and landlords that are now REITs that are, it's a blended yield. They don't care if places sit empty, which is why you see storefronts empty in major cities around the country, frankly, in major areas. So, the fact of the matter is there are folks here who work for us who rely on the income that is able to support creative lifestyles that, they're artists, they're actors, they're whatever they are. And we will be closed. And it's a sad day. We're an iconic bar in the West Village, and today would be a huge day for us, but we're not going to cry in our beer.
Listen, I know that we are a stock market program, but let's talk about the human side of this. There are 23 million people that work in restaurants, bars, hotels, or catering, according to their industry associations. We lose 20% of those jobs. We're adding 5-6 million people to the jobless rolls. This is an industry which needs a fairly rapid recovery, or I would imagine you would agree, some sort of targeted stimulus directly to the small business worker.
Well, right now the small business has to continue to pay the rent and pay the bills. And there's, so far there's really been no discussion of I don't think you necessarily are supposed to go after landlords. It's not their fault. Having said that, there needs to be relief. Most small business folks do not own their real estate, and that's their biggest cost in addition to payroll. So as you talked about, look, we're at peak labor in this country. We're at 3.5%. We hit that 275 on the last non-farm payroll. And restaurant workers in many cases are not even counted as part of this job market. So when you think about the impact of the consumer, the small business is 70% of the economy. This is something that I think is very difficult to quantify. And equity markets, obviously, as you look at some of the bigger companies that we talk about every day on the network, the infection rate peaks, and whenever that is, and how quickly it takes to get there, and how quickly we can recover is going to be the determinant of whether this is V-shaped or straight into recession. So I think the backbone of this country is the small business and the small business worker, and that's the complicated part about where stimulus is coming through today.
And I'm glad we could talk about it. Obviously in these times you got to think about those folks as well. But before we let you go, you're here every day, Tim, talking about the markets. We saw a 1,000-point gain for stocks, a couple trillion, it looks like, will be thrown at the credit markets, the financial markets. Were you happy with today's price action? Did it signal any kind of a bottom to you?
Well, again, these moves, I think I prefer to look at it as where are we over the last few days. I would, if you net out that 7% move in 25 minutes on Friday, which we talked about, I thought was pretty artificial. That somewhere around 2,500 here, it looks like the market is trying to find some levels. I'll let the technical guys have their piece and talk about it. The things that today are either encouraging or concerning. Look, at some point when you start talking about this type of fiscal on top of a massive deficit and where we were funding corporate tax cuts at 3% GDP for 10 years, the dollar's up 5% off its lows, and this is a flight to quality. And right now, this is actually, sadly, probably good news. The bond market had an enormous move today. So the 10-year sold off over 3 points and is now backed up, but on some level is showing some signs of maybe getting back to relative value, and oil plumbed new lows. So I just think that there's so many moving pieces. The most important thing I'm watching right now is credit. And if you look at the investment grade credit, spreads have widened about 125 over. And I think, the real risk for a lot of corporates, and this was brought up in kind of focus when the discussion about $39 billion to airlines who were buying back stock. A lot of companies levered up as they were buying back stock.
Yeah, and a lot of these closed-in bond funds and bond funds that we've talked about, corporate and high yield, a lot of them went down today, Tim. Thank you very much.